Okay, guys, thanks for joining us here in the charts. It is the market beast, Napoleon Macro Soxl. We have an instrument here we're going to take a look at. We're going to take a brief look at the macroscopic picture. We're going to pull up the technical supply and demand levels, taking a look at the weekly candles. We're going to crank it down to the daily candles as well to show everyone that this instrument is unfortunately coming off of a somewhat of a blow-off top, and we'll take a look at a few details to see if the buyers are going to step in here and what to look for in order to determine if the buyers are stepping in or if this blow-off top downwards trajectory will continue. So we have a lot of things to go over, so let's make it short and sweet, guys. Welcome back, loyal family. If you're new here, we only explore price action. Thanks for sticking around, to my loyal subscribers. Let's go ahead and dive right into the charts here, shall we? So today's December the 29th, 2022, and the current, or the previous close of Soxl, $8.86, slightly negative close, 4.4% for the day. Okay, all right, let's take a look at this, guys. All right, so I guess for starters, let's go ahead and pull up the levels, weekly candles. All right, so here are my technical buy and sell levels, currently range bound, very large range. I guess the lower levels is probably more practical and useful for now, because the 2350 up to 2650 level, I don't think we'll be seeing those levels anytime soon. Pardon me if you're bullish on this instrument, but that's just my speculative observation. Let's let the markets decide what happens next. But let's get into this potential. I think this is a potential falling wedge. These are technical bullish patterns. But remember, a pattern isn't as good. A pattern is only as good as its actual breakout. So let's wait for the actual breakout. Looks like there has been a breakout attempt here as of recently. If I can get to this little handy dandy thing here, looks like there was a recent breakout attempt near the $12.15 level, and there has been a failed attempt there as the market continues to make lower lows ever since the market actually had this. I'm going to consider this a blow-off top, guys, at about $70. So before we get into the technical supply and demand levels for the weekly candles and the falling wedge pattern, let's take a macroscopic look and just kind of look at everything. Let's pull the monthly candles. Maybe we can see it a little bit better. 3-month candles. All right, so let's just kind of look at everything here. Let's erase everything for a second. So just to give you guys a general idea of the magnitude of this recent move, the market actually did some consolidating for some time, starting back here at about January 2010. Well, at least according to this data that I have here in front of me. This is tradingview.com that I'm using. The market actually started out consolidating January 2010. Stick with me here, guys. I'm just trying to get a general idea of this consolidating move up, higher low, up, higher high, double bottom-ish, extreme move. Now let's pay attention to this very extreme move. Let's calculate how long it took for that move to happen. So that's about 548 days for the market to go from the lows of about $4.50 all the way up to the $70 level. It took about 548-ish days. That's approximately just over a year and change, right? So the reason I'm bringing that up is because if you notice, this very extreme move to the upside has been followed by a just as extreme move to the downside, and has given back most, if not all, of the gains that it created back in April 2020. So this is important, because if it takes less amount of time, right? Less amount of time to get back all the gains that it created that we've already measured, about 548 days. This means that this is a very extreme move, right? Very extreme move to the upside, and it's likely this market needs a very lengthy, in my opinion, guys, again, not financial advice, please kindly use your sim accounts out there, do not take this as financial advice, but I think this market needs some time for consolidating above the $5 level. Let's go ahead and put a line on the chart somewhere right around there. So if the market can maintain support above the $5 and precisely 6 cent level, the blue line that I just put on the chart, that would be probably in the best interest for the buyers if you're bullish in this market to attempt to make at least an can I speak? An attempt to push back up to the $18.96 level. Okay, so that's what I'd be looking for. This is kind of the only range that I would look for if I were bullish in this market. And total transparency, this is just a request, guys. I'm not invested in this. Okay, so from the current level up to 1896 is about 107-ish% move to the upside. So I just want to give you guys that overall view that this market had a very extreme move to the upside for about 548-ish days, and it has only taken approximately 273 days, just under a year. Well, under a year to give it all back. Okay, so just be mindful of that. So if, as far as like some sort of returning to the higher levels in a short period of time, I don't see it, guys. No, you got to give this market at least until the middle of next year to see any type of real movements. And again, that's my opinion. Now, but let's take it on over to this potential bullish pattern here that I noticed, and then we'll close things up here. We're back on the weekly candles. Now, again, this is a speculative pattern. We have to see the actual breakout to know whether or not this is an official pattern. But as far as what I'm seeing, let's bring it down to the daily candles. Unfortunately, after that blow off top at about $70, this market is successfully making lower highs, guys. Unfortunately, if you're bullish in this market. So yeah, if you are out there, you know, betting, buying up this market, unfortunately it's making lower highs. Started here at about well, as far as the pattern, at about $21, and I just circled another area at about $21.33. We have another lower high here at about $14. We got a double top here at about again $14, and then it actually made a new high here at about $14.50, but unfortunately it did make a new low, attempting to continue the trajectory after the blow off top. Now the more important levels, again, and we'll close it out here, guys, it's getting pretty long. The more important levels that I would focus on if I were bullish in this market, again, I'm not, just a request, $6. Okay, $6 is where the participants recently stepped in, pushed the market up to push it as high as they possibly can, but failed to make a new high to turn things around here. So what I would look for is a higher low, or just simply for the market to revisit the levels where the market participants stepped in, which is at about $6. And if that level fails, then of course the next one, according to the levels that I understand, guys, not guaranteed if you're bullish, okay, $3.50. But let's take it one step at a time. Let's just mark that $6 level for now as a potential landing pad, or soft landing pad here over the course of the next week, 2 up to 3 weeks. To see if it can actually break through this descending line of resistance that is obvious to me, and of course arbitrary to the average eye. I do think that this market is attempting to find support, or to see if the active buyers can support this market at about $6. So let's see if the buyers will step in again at that level. But the most important thing is to get beyond this descending line of current resistance that we have just pointed out. The market buyers, that is, are attempting to break through, but they are failing, as we can see here at about at least 5 attempts that we can verify. Okay, so again, salads of words. I feel like I'm going over. No, this is pretty good information, I think. $6, guys, incoming. Okay, if the buyers step in, I'll just give you guys 2 levels and we'll close it out here. It looks like there might be some activity at about $8 or $6. So let's just keep it at a range. Forget the $3.50 and the $20. Forget all those numbers, okay? Let's leave this video out with one range, okay? And that's going to be $6 and a penny, all the way up to about, let's say, $8-ish. It's more like $7.91, but let's just $6.01 up to $8. That's where I would pull up my charts to see if I could find a buy-in opportunity, by way of looking at the lower shadows on the candle's body, starting at the daily, even as high as the weekly candles over the course of the next week, 2 up to 3 weeks, to find a buy-in opportunity on my sim account. Okay, so that's how we're going to close things out here. Hopefully that was enough information and detailed enough, and this video wasn't too long. So that's how we're going to wrap it up here, guys. So hopefully that was useful. If you don't mind, we'll wrap it up here and doing me a huge favor before you go by simply leaving an appropriate thumb. I would appreciate it below the video, and also leave a comment so that the YouTube algorithm can promote the video on the channel. Thank you for your continued support. If you guys are new, we also explored the alternative market, Bitcoin for now, so you can kind of join us here on this interesting journey, and we'll send that out to you momentarily. Welcome in. I'd like to take this opportunity to thank you all for your time. Remember to always have a strategy before you enter. Keep that positive energy flowing. We'll talk soon, and bye for now. Guys and gals.